Hi, I'm Brad Burns and welcome to the first edition of the Morgans Edward Street Weekly Wrap. To kick off the new financial year, each week we'll aim to deliver a short video to discuss the market in review and finish with a key stock selection that we've been either buying or selling for the week. Of course, all our comments are general in nature, and please speak to your Edward Street advisor if you wish to know if these recommendations suit your personal needs or objectives. Okay, starting off with the week ending 7th of July. To my right we have Matt Gordon, who is a senior advisor at Morgans Edward Street, who will give us a quick rundown on the market in general and what he's been seeing in the markets this week. Matt?
Thanks, Brad. Yeah, nice week to start the new financial year, with Tuesday being the strongest day we've seen this calendar year. We're pleased to see the back end of seasonally weak months being May and June, with tax loss selling affecting market sentiment, resulting in the index down 3.4% over these 2 months. Thankfully, July is usually a better month, with 14 of the past 20 years showing a positive return, which bodes well for a positive month this year. With the $10 billion of dividends hitting the market this week, a strong start was expected. Overall, a good week, with retail sales coming out stronger than expected and RBA keeping interest rates on hold, with our cash rate remaining at the 1.5%. Surprisingly, the Aussie dollar, which climbed as high as 77 cents recently, based on US dollar weakness, was weaker on the day of the rates announcement and now trades around 76 cents or just under. Looking at sectors specifically, we have seen banks rise this week on the back of strong opposition to the South Australian bank levy, which now looks unlikely. Retail figures were stronger than expected earlier in the week, helping the sector, which has been struggling thanks to Amazon fears. Commodity stocks, including BHP and Rio, have been positive thanks to a stabilising iron ore price. Some strength in the oil price earlier in the week, and copper strengthening as well. Moving forward, we are keeping a close eye on US bond yields as they begin to tick up again, with the 5-year bond yields closing in on 2%. Rising bond yields are of course a negative for markets, and more importantly for bond proxies like Sydney Airport's Transurban and property and infrastructure stocks, which I note have been considerably weaker over the past fortnight.
Now to my left we have Cameron Mole, and he'll present to you our buy idea for the week. Cameron?
We are currently keeping a close eye on the oil price. After a strong rally earlier in the week, oil has been met with a bit of profit taking in the past couple of days, with West Texas now trading closer to $45 a barrel. We believe a stronger oil price is beneficial to the global economy, and many local names will be looking for higher prices to help push our market higher. Oil Search is the one we've been buying for clients and is leveraged to the higher oil price and is currently on the Morgans High Conviction list. With a market capitalisation of over 10 billion Australian dollars, Oil Search Limited is engaged in the exploration, development and production of oil and gas in Papua New Guinea. We believe the stock currently offers appealing value to investors as a shorter-term trading opportunity or as a longer-term investment based on strong fundamentals. Whilst this stock has remained in a trading range, we believe there are a number of key catalysts over the near term which can propel the share price beyond current resistance levels and offer strong return for investors. These upcoming catalysts include, firstly, the completion of the PNG elections, which has been ongoing since June 24 and ends tomorrow, Saturday the 8th of July. The sovereign risk of operating in a country like PNG is always present. However, we are comforted by the strong and prosperous relationship that Oil Search has with the PNG government dating back to as early as 1928. Another potential catalyst we believe the market may have overlooked is the potential growth available to Oil Search in order to develop at least 3 new LNG trains, with further upside potential for expansion beyond the 5 trains. The final catalyst will be the finalisation of the cooperation agreement between PNG LNG and the Elk Antelope project, which we expect will be submitted to the PNG government around August or September this year. We believe these acquisitions complement Oil Search's focus on acreage, with the potential to support the ongoing expansion of its LNG portfolio. Our oil and gas analyst, Adrian Prendergast, has a top of consensus $10.22 valuation on Oil Search, and this currently represents a 53% premium to the current share price of $6.65.
In terms of corporate actions and IPOs of note this week, we have upcoming IPO of Convenience Retail REIT. If you're interested in taking a further look at this, please get in contact with your Edward Street advisor as soon as possible. All paperwork to be due into us by the 19th of July. Well, that wraps up this week's edition. Please speak with your advisor about any of the stocks that we've mentioned today, and we'll see you again next week. Have a great weekend.